welcome to the Premier Property Weekly Q&A, and as per usual what we're going to be doing is we're going to be answering questions right now. And these questions, if you're wondering, if you're joining us here for the first time, these are questions from our Premier Property Inner Circle community, people that are really on it investing in property. So right now let's jump into the questions, and helping me today is part of our support team here at Premier Property, and we have Amy. Amy, do you want to say hi? There you go. Right, okay, so we've got Amy asking the questions, so fire away and let's see what the questions are.
Okay, Clint Christian asks, so he says, "Hi Cam, I've got a potential project I'm looking at, a commercial with 3-bed flat above. I think the flat can be split into 2 flats as the floor space is approximately 92.62 square metres. I think the shop can also be split into 2 flats or 1 flat and smaller commercial unit. The floor space is 117.98 square metres. I've used the £1,200 per square metre conversion formula to calculate the costs, and the figures seem astronomical. £141,584 for flat above and £111,149 for commercial space. I'm thinking it shouldn't be more than that. I'm thinking it shouldn't be more than about 20,000 for each story. So my question is, am I using the conversion formula correctly by doing 1,200 times 92.62 equals 111,149, or should I be using a different conversion figure other than £1,200 per square metre to calculate the costs?"
Brilliant. First of all, round of applause for Amy for actually reading that out.
It's a mouthful.
Secondly, Clint, I love the question. A lot of detail there. So let's summarise what Clint is asking. So Clint, as he's explaining, he's looking at a commercial and a flat above. He's looking to actually convert them into 4 units. Now we've got to look at the viability of that, but let's just say that is viable. So Clint, answering your question, and thank you for asking because you're helping a lot of people with this. To convert these the flats and commercials, one of the numbers that we use at Premier Property, because you got to start with an easy number right at the beginning before you get bogged down into too much detail. So what we do is we have a rule of thumb, a quick rule of thumb when we're actually doing conversions. So this number, and this is all tested, it's tried, of course. There's a lot of numbers behind it, a lot of calculations behind it. But what you'll find is, if you're like me, you find that your number ends up being 1,200. So to convert £1,200 per square metre. Now remember, like I'm sharing with you, this is the first rule of thumb, and £1,200 works. That includes everything. When I say everything, that includes the services coming in, that includes the actual renovation of the conversion, that includes the whole fit out of the property, that includes electric, it actually includes gas in this as well. So it includes the whole fit out, the whole thing. It includes architect's fees, any other fees that you got involved. It's all encompassed in this one figure. And by the way, if you're here and you're joining us here, my name is Kam Dovedi. I'm the founder of Premier Property, and I'm an investor developer, and I love sharing answers to questions like this to help you move forward in your property journey. So if you're watching this on YouTube, feel free to join our channel. You know what you need to do. You can subscribe right here, okay, if you're enjoying this. So let's move forward and answer this question. So £1,200 per square metre, Clint, is the answer, and you're quite right. It gives you a reality check. Now typically for a flat that ends up being around £50,000 to £60,000 typically, depending on the square meterage. So you can just multiply it. So £1,200. So let's say it's a 40 square metre flat. Let's say 1,200 times 40. You got your answer, and you're quite right. It gives you a reality check of what the actual costs are to actually do the whole conversion. Because the mistake that people make is and you're quite right, you mentioned it, is it 20k? Well, the mistake that people make is they get their numbers wrong right from the beginning, and what then happens, of course, is they haven't got any profit margin, and even worse, they end up losing out on the money. So if you're like us at Premier Property, you can use this number of £1,200 per square metre, and easy way of actually assessing your numbers, and then of course you can do further detail. So I hope I've answered your question there, Clint. So you're on the right track, and that's what the figures are going to be. I've answered your question. but you know, we're at Premier Property, going to add a little bit more. So what that really, what that really means for you is that when you are looking at properties for conversion, you do want them to be in an area where it's viable for the price points of the properties. What does that mean? Well, we work at Premier Property from the house price index. So right now the house price index is 252,000 across the country for a house. So what we look for is areas where the properties, the houses, are typically within 75% of this number. If the houses are within 75% of this number, then you know that you're in an area where it makes sense to do conversion. Hopefully I'm making sense here for you. Yeah? So if you're doing flats or houses or whatever, you know, use the house price index, think about the 75%. If it's that area, you'll find that these figures will work for you in that area, you know, where you'll have some uplift, and of course you'll create more income with more units. Clint, love your question. I hope you like the answer, and looking forward to your further questions next week or the week after. And by the way, remember, you know, aim here is to help you and assist you, to help you in your property journey. So if you've got any questions that you would like to ask or any comments, and I'd love to hear from your experience as well, feel free to comment on our channel here. This is recorded live on Facebook, and then this is put out there on our YouTube channel. And if you're not already part of our community in the YouTube, then you know, come along. The community is growing, and people are loving what we're doing. They're loving the real. I get a lot of "Cam, you're very real," loving the real answers, because that's what we're doing. We're active investors, developers. So if you're not already part of our community, feel free to join us. You can do that right now as we're going through these questions. You know, it's on your little subscribe button, and there's that little bell icon, isn't it, that you can click on and join our community. Love you to be part of this. Yeah. So over to Amy. Next question.
Okay, so Palashi says, in one of the gold mine area, the council has recently changed their rules and regulations for HMOs. Mainly the changes include having a compulsory living room with minimum 11 square metre along with a kitchen of 7 square metre, and for HMOs below 5 people, a compulsory HMO licence. As a result, many people are getting rid of HMOs in the area. How can we change our strategy for HMOs in such an area? Is it worth investing in HMOs in this area?
Another very detailed question. But we expect that, won't we, from our Premier Property Inner Circle community, right? Because they're really banging on it. Yes. So, right. Palashi, HMOs, we love HMOs. For the right areas, they work really well, and for the right type of clientele. So, HMOs, now, my personal favourite, and the one that we love at Premier Property, are what we call the under-the-radar HMOs. So what does that mean? Well, it means maximum 4 tenants or less, which means that, you know, typically there isn't a large amount of legislation, and you can typically repurpose the normal residential properties, you know, 2 stories, 2-bedroom, 3-bedroom houses into a, you know, lovely under-the-radar HMO. So I hear your question, as Amy's read it all out in a lot of detail. So this is really brilliant. So HMOs are working to answer part of your question. And the thing about HMOs is, you know, many people get confused about the actual HMO license. So please keep in mind, HMO licensing is different to Article 4s, and you know, people do get that confused between Article 4 and HMO licensing. I'll explain Article 4 in another video, but in this one, what I want to share with you is that, you know, your HMO licensing, all that really is you know, a form of, you know, making sure that you've done the right checks for the property, and it's a you know, I don't want to say it's a form-filling exercise, but it's kind of a form-filling exercise in making sure that your property adheres to the rules and regulations. And to be fair, the rules and regulations, you know, you can manage them. It's not it's all very doable. So let me give you some examples. So that might be fire doors, right? That might be fire doors. That might be fire closers. That might be the fact that you need a smoke alarm in each of the rooms, you know, and various things like that. So all very doable things, which your contractors are going to do for you anyway when you're doing a refurbishment and a fit out. So my point is, as you're getting me here, is that it's very doable. You know, a lot of people that are put off by all that stuff, but actually it's okay. Once you've got a system, I know it's okay for me to say it's easy to do because we got that system. But just let me know, make some comments, and if you want to know more about HMOs, we can cover all of that as well. What the requirements are and all that kind of stuff. But my point is that it's okay, you can do it, and the licensing literally is the fact that the HMO license will be given to you that you've adhered to the conditions. That's what it is. Now, HMO officers, in my experience, they seem to be very helpful, friendly, and what we tend to do is, as a belts and braces, we always invite them along to come along and see our properties. Sometimes they do, sometimes they don't. There's always information available for the local area as well, so you can learn what you need to put in. We always like to just contact them just to let them know what we're actually putting into the property and just get that confirmation. And like what I say, if we can get them to visit the property, then we get them to visit the property as well. Again, a belts and braces approach. So HMO officers can also help you with this, and you can make these HMOs work. So are HMOs good? Yes, they are. HMO licensing, to answer your question specifically, like what I say, summarize, it's a type of a form filling exercise adhering to the requirements in the property. So of course you've got to do the requirements, and then you fill in the license, so that's fine. Typically you're looking at the areas that we invest in a couple of our areas. We've got 4 different areas in the country, only 4, yeah? You only need 1 to be fair to start with. Yes, we've got 4 different areas, and in where we do HMOs, in one of those areas the licensing is £500 per annum, and in other area it's £750 per annum, and in the third area it's actually £1,000 per annum. So there's 3 different, it depends on the borough, so that's the kind of price range that you're looking at. To be fair, we don't really do the HMOs in the £1,000 area, which is London actually, so we use different strategies for that. But north of Watford, £500 to £750 for the year. So you pay the fee, fill the form. Of course, you fill in the form in what you've done and what the property is. Very easy. 4 tenants or less under the radar HMOs. And you ask about communal space, so you're saying it's a mandatory requirement in your area. Well, actually, let's think about it. Common sense approach. If you've got, for example, one of our favourite is student HMOs. Student HMOs, or if you've got working tenants, they're going to require a communal space anyway. And by the way, we've tested all this. So we tested HMOs with no communal space. We've tested HMOs with communal space. Now, what you'll find is, if you think about it, if you put, if you put yourself in the shoes of your tenant, right? You'd want a communal space, wouldn't you, right? So, you need that. You would have that anyway. So the fact that it's mandatory is okay. And another little point here. I'm going on here a bit, but hopefully capturing all these tips I'm sharing with you. Another point is when you go to finance these or refinance these HMOs, one of the requirements from many lenders is that you actually have a communal area. That's something that people find a bit of a challenge after they've got no communal area. So having a communal area is a benefit to you for your financing, benefit to you for your tenants, and also if it's compulsory for you and you've got to do it, well, that's fine because you've done the right thing anyway. Plashy, hope I've answered your question there. And if you're enjoying this, as I mentioned, feel free to join us by subscribing and enjoying these videos. Next question, Amy.
So Jason Joyce has asked, is anyone else finding that asking prices at estate agencies have increased quite a bit since the stamp duty extension? The properties are selling quickly too. I wonder whether this is if this will continue past the stamp duty extension or will prices pull back? I'm just mindful on my offers to factor in potential pullback after the extension holiday so I don't overpay. But I'm finding a lot of buyers are paying over the asking price, so not getting a look in. Be interesting to know what your thoughts are on this and what others are doing to combat this as well. Thank you. Oh.
Yeah, so I wonder what you're finding. I mean, are you finding that prices are, quite hot? Are you finding that prices are stagnating in your area? Or are you finding that prices are actually dropping? I'd be really interested to hear from you. Just drop us a comment here. I'd love to hear from you as well, right? Now, the thing is, what we're finding is that in our areas, prices are heated. Look, let's be honest, right? Prices are heated. There's a lot of competitors out there, and by the way, you want that. You want to be in an area where there's competition, because if you were the only person investing, that would be scary, wouldn't it? Yeah, you want competition. You want to love competition. You want to be in the environment of competition. That's where you want to be. Now, in terms of prices, well, what do you do as the price is rising? So this is a question I get asked typically on a weekly basis with my deal sources. It's like, Cam, the prices are going up. Agents are saying the prices are going up. The prices that we want to pay, they're not accepting them. And then I say to them, how many deals have you found in the last month? They go, oh, yeah, 2 or 3. You know, I say, well, you know, we've got to keep our heads and we've got to work to the numbers. So the way we do this at Premier Property is, no matter how heated the market is, no matter how much competition that's out there, no matter how many people unfortunately are overpaying for the properties, in my view, right? It doesn't matter. You keep your cool head. You work from the numbers that work for you, because trust me, when the market changes, it changes. When I started in property, I started back in 1989, and the first property I bought, as soon as we bought it, in the next 3 months, the market crashed by over 30%. In fact, I think I personally started the 1989 property market crash. That's my view anyway. I don't know what you think. But you know, that's how it was. But I didn't know anything back then. I was 18 years old and I just got into property. Yeah. 30 years later, what I'm realizing is, you know, you got to really be aware of the recessions and the timing. And it's when everyone says, oh, the prices keep going up and keep going up, that's when the prices tend to fall. Now, we don't want to assume, and we don't want to, you know, I ain't really got a crystal ball, to be fair. We like to work from facts at Premier Property. So what we're doing is exactly this. Right now, we are working to the numbers, and we're making sure that we only buy good properties at the right prices that work. Now, of course, you've got to learn the detail of how you deal with estate agents, how you can add value, and all of that. You know, I can train you on this stuff. This is what I do you know, as part of being an investor developer, right? So there's more information to have, and I'll continue to share information with you. That's okay. But you can achieve this. It does happen. You're not looking to buy everything. You know, you're looking to buy good deals, aren't you? To help you create your financial freedom, to make sure that you can use your capital wisely. Yeah, you get me, right? So you're doing it in this way. So, what am I saying? What I'm saying is, we're keeping ahead. We're making sure we're working to the numbers. And if somebody else wants to pay over the odds, well, that's fine. We let that happen. It's keeping that little bit of discipline, you know, keeping the discipline and just paying what you need to pay. Now, having said that, however, there is a key date that I'm going to put on the board here right now. Let's use this colour pen. '31st of July, that's not my favourite colour pen, that one, right? But like, 31st of July is what that says. Let's see, let's try this one. 31st of July, yeah? 31st of July is a key date. Why is it a key date? Well, look, we're all aware of furlough ending, we're all aware of the stamp duty, land tax, holiday ending, we're all aware that there's various changes happening in bounce back loans. People are going to have to start paying these back as well. So all of this is coming in. So my point is, 31st of July is an extremely pivotal date. Because at that point, what we will do at Premier Property, and you can do as well, is we will decide to either realign with the property market prices and, you know, move up the prices, or we'll find that there's a decline in the market, and you know what, so glad that, you know, you're part of this and you're listening to this and you actually kept your head. You know, you remember this. You might even remember this video. You know, that you kept your head and you bought well, because this is the key. And you bought at a discount and you worked out ways of adding value. You know, stuff that I train people on, right? So that's how we're doing it. So 31st of July is a pivotal date when you can decide to realign. Now, by the way, when you realign, it's okay, because if the market moves up to here, you know, at Premier Property, we're still buying here. If it goes up here, we're buying here. If you're going up here, we're still buying here. So you're always buying with a cushion. Hope I'm making sense here for you. Yeah? So in this way, you can really make it work. Yeah? Hope that makes sense, team? Amy, any more questions?
No, that's all of them.
Oh, we got one from Phil, haven't we? Phil.
Did you?
Yeah. That bit there.
One more to read.
Yeah. How's Amy doing, by the way? Can we have a little thumbs up for Amy?
My arm's aching.
Arm's aching, but she's doing alright. Here you go.
Okay.
Right.
Right.
Just at the bit off circle.
What is the rate for VAT for property purchase, 20% or 5%?
So Phil's asking what is the rate for property purchase if it's got VAT. So if it's got VAT already, then it's going to be 20%, Phil. Yeah, it's going to be 20%. That's what it is. Yeah.
And then if it's not elected for VAT, can you reclaim the VAT element of costs for works done?
So if it's not elected for VAT and you are doing a new build, as I understand that you're doing, so then there's no VAT on the actual property. However, by the way, no tax advice, I'm just sharing with you what we do, right? So when we're doing new builds, there is zero VAT. And what we then do is we actually get registered for VAT, and then you can actually reclaim the VAT element on your costs. Yeah? So there's no VAT on new builds. You can get VAT registered, but we get VAT registered for the company, and then you can reclaim the VAT on your costs. So when your contractor gets you and gives you an invoice, in that invoice, typically for a new build, it'll be zero VAT, but you can, if there's any other costs that you got, such as architectural fees, for example, and there's 20% VAT on that, then you can reclaim those because there's zero VAT on the build, but all the other expenses, any other expenses, like I'm giving you an example of architectural fees, you can reclaim that 20% back if you decide to elect yourself to be VAT registered. Yeah. So Phil, hope that answers those questions. So Phil's got a number of questions, very detailed questions there as well. So what I'm going to do for you, Phil, is I'm going to make sure one of my senior architects comes back to you with those your specific project questions, and also I'm going to contact one of my senior accountants, and I'm going to get your tax questions answered for you as well. So this is all for Phil. Phil is part of our Premier Property Inner Circle, probably watching this live, and as you know, it's recorded on YouTube. So I hope you enjoyed today. I'm Kam Dovedi, the founder of Premier Property, helping you to take your property investing to the next level. I'll see you this time next week. See you later.